Hey everyone, welcome back to the channel. Today we're diving into a crucial topic for anyone looking to buy a home. The top 5 things you should never do when getting a mortgage. Buying a home is a huge financial decision, probably the biggest one you'll ever make, and securing a mortgage is a critical part of that process. But there are some common mistakes people make that can sabotage their chances of getting approved for a mortgage or even cost them thousands of dollars in the long run. We're going to break down those mistakes and, more importantly, how to avoid them so you can set yourself up for success. All right, let's jump right into the first big no-no, making large purchases while you're in the mortgage process. Look, I get it. You're excited about the new house. Maybe you're thinking about all the new furniture you want to get or that sweet new ride to park in the driveway. But trust me, this is the absolute worst time to be making any big purchases. Why? Because when you're getting a mortgage, lenders are scrutinizing your finances like hawks. They want to see that you're financially responsible and that you can comfortably handle the mortgage payments. A big purchase can throw your whole financial picture out of whack in their eyes. You might have a solid debt-to-income ratio now, but suddenly financing a car adds a big chunk of debt and can make you look like a higher risk. Even worse, if your credit score takes a dip because of the new debt, you might not even qualify for the loan, or you might get stuck with a higher interest rate. So hold off on those big purchases until after you've closed on your house. You'll thank me later. This next one might seem obvious, but you'd be surprised how many people trip up on it. Don't switch jobs while you're in the process of getting a mortgage. Lenders crave stability. They want to see a steady work history that proves you have a reliable income stream to repay your mortgage. Switching jobs throws a wrench into that equation. Even if you're moving to a higher paying job, lenders might see it as a red flag. They haven't had time to see that you're stable in the new position, and they don't have a long track record to base their decision on. So even if a recruiter comes knocking with an amazing opportunity, my advice is to stay put until after you've closed on your house. The last thing you want is for a job change to derail your mortgage approval and your home ownership dreams. Chapter 3. New credit can hurt your mortgage approval. Here's another crucial tip. Resist the urge to apply for new credit while you're in the mortgage process. This includes things like new credit cards, car loans, personal loans, anything that requires a hard inquiry on your credit report. Each time you apply for credit, it leaves a mark on your report, and too many inquiries in a short period can make you look desperate for credit. Lenders might interpret this as a sign that you're overextending yourself financially, even if you're not. Remember, lenders are looking for borrowers with a strong track record of managing their finances responsibly. A sudden flurry of credit applications can raise red flags and potentially harm your chances of getting approved for a mortgage. So my advice is to put those credit card applications on hold and wait until after you've closed on your house. Your credit score will thank you. Chapter 4. Closing accounts can backfire. Now, you might think that closing some of your existing credit accounts could actually help your mortgage application. After all, wouldn't that reduce your overall debt and make you look more financially responsible? Well, not necessarily. In fact, closing credit accounts, especially older ones, can actually backfire and hurt your credit score. Here's why. Your credit score is partly based on your credit utilization ratio, which is the amount of credit you're using compared to your total available credit. When you close an account, you're reducing your available credit, which can increase your utilization ratio even if your spending habits haven't changed. This can send a negative signal to lenders and potentially lower your credit score, making it harder to get approved for a mortgage with favorable terms. So my advice is to keep those accounts open, even if you're not using them actively. Chapter 5. Don't ignore your credit report. This brings us to our final and perhaps most important point. Don't ignore your credit report during the mortgage process. In fact, you should be checking your credit report regularly, even if you're not planning to buy a house anytime soon. Your credit report is like your financial report card. It contains detailed information about your credit history, including your payment history, outstanding debts, and any negative marks like late payments or collections. Lenders use this information to assess your creditworthiness and determine whether you're a good candidate for a mortgage. Errors and inaccuracies on your credit report can unfairly lower your credit score and jeopardize your chances of getting approved for a mortgage or getting the best interest rates. By law, you're entitled to a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every 12 months. Take advantage of this and request your reports. Review them carefully for any errors or discrepancies and dispute any inaccuracies you find with the credit bureaus. Correcting errors on your credit report can significantly improve your credit score and increase your chances of mortgage approval. Outro, set yourself up for success. Thanks for watching. I hope these tips help you navigate the mortgage process with confidence. Remember, buying a home is a huge financial decision, but by avoiding these common mistakes, you can greatly increase your chances of getting approved for a mortgage with favorable terms and achieve your dream of home ownership. If you found this video helpful, make sure to like, comment, and subscribe for more tips on managing your finances and making smart investments. See you next time. Willow Financial NML 2522546. Apply at www.willowsj.com.